Hello, everybody, and welcome to the Middle Class Investor this week. This is Seth Martin, your host. I want to have a pretty short session tonight, mainly because I just want to focus on the S&P 500 and the bond market. I think we're at pretty critical junctures in both of those markets, and I want to make sure that you know kind of the places that are key on the charts where we need to make a decision. So without further ado, let's zoom in here on the S&P 500 and do a little talking about what we see here. So we've been operating under the premise that this was a 1 down, 2 up, and then another 1 down, and this is all 2 back up to here. So this is a 2 here. So let's call this Roman numeral 1 and Roman numeral 2. Okay, and then let's make this a regular 1 and then a regular 2, which would make this down here 3 of 3. Okay, which should be pretty strong. So we might have a little move up as long as it doesn't take out the high, and then 3 of 3 gets started, and we should see selling pick up pretty rapidly. Now, if we take out this high and the market runs up, then 1 2 1 2 is the odds of that are starting to fade. Okay, so the way you kind of look at these things is you look at kind of an odds favoring position, and the alternate count is that maybe this is a triangle. Okay, so the triangle kind of comes down through here like so, and like this, and the idea is this was 3 up. Okay, so this is all 4. So A, B, C, D, and so on and so forth. With meaning that when it breaks out, we're going to have a 5. Okay, so this would be 4. Now, one of the things I like about L8 Wave is not so much this pattern stuff, although the patterns are important. But what's more important is looking at the internal market measures at these turns, and the EWI people do a really good job of that. And so one of the reasons this is not the primary count is because these measures internally are they're not what you would expect if you were going to have another 5th wave up. So it's more of a counter trend kind of looking move. So this whole move up here has kind of counter trend internals. This move up here has kind of counter trend internals. So that's what makes this triangle, a less likely account. Now that doesn't mean it's not likely at all. It just means that in terms of probabilities, it's a little less likely. So I want to just show a couple of key places on the chart. So again, if 1 2 1 2 is if that's what's happening in the market, then we shouldn't see the market get much higher than this, let's call it 2760, 2770 area. We could see a slight run up tomorrow above this high, but maybe not taking out this high, and then a reversal. And if that's the case, I would say that we're pretty much headed for the downside. Now, to make sure, if you want to know, okay, well, where will I know for sure? Where you'll know for sure is when you break below this 2550 area. That tells us that this whole move is the upward portion of this move is done. Okay, and if you're still in the market, when we break down below here, you're probably going to see some heavy selling and some heavy losses. Okay, so that's what I want to say about the S&P 500. Again, it doesn't mean, well, it does. If it breaks below here, it does mean that it's not going to make a new high. That's a fact. It can't break below here and still make a new high. Not in the relatively near term to intermediate term. But it could come down a little bit, let's say into here, maybe even to the trend line, and then rally and go to a new high. That could happen. Or it could just rally from here and start making higher highs, higher lows, all the way up. But again, I want to stress the internals at these turns are not where they would normally be if we were expecting the uptrend to continue. Okay, so I just want to make that clear. Excuse me. All right, let's look at the bond market. Bond market is also at a very critical juncture, and I just want to focus on the 10-year right now. So, just to kind of broaden out and recap what we looked at, we thought this was going to be the low, and then this low actually eclipsed this low ever so slightly, which meant that this new low was potentially the end of a downtrend, the end of a very long reduction in interest rates. Then we were saying, okay, well, so we broke the downtrend here when we broke out of here, and then we pulled back. So we were kind of operating on the assumption this is 1, 2, and then 1, 2. So then we're going to we should see a pullback at least into this 2.6 area on the interest rates, and it could go as low as down here around 1.9 below this pivot. In other words, if this is the end of and it doesn't really look like it, it looks like it looks like to me that this leg is pretty equal to this leg, so I'm expecting this to only pull back into here to finish, let's say, a wave 3. In other words, this could be wave 1, 2, and this could just be wave 1 of 3. And then we're looking at maybe a pullback into this area and then a rally all the way up to maybe 5% or so on the interest rate, on the 10-year interest rate. And then, after we get up there, then we'll have a substantial pullback in the market. But don't think we're going to have a substantial one just yet. I think we're going to look at maybe this 2.5% area to 2.6 area pullback. But the good news about that is if you're still in the bond market, you still got bond funds, it looks like the market's going to give you another chance to get out maybe somewhere down here. So we're going to have a pullback in rates, which means there's going to be a rally in the bond market. And that rally could coincide with a sell-off in the stock market. So I think these are critical junctures. I just want to alert you to them because they're areas where you may or may not need to make a decision about your investment accounts. All right, that's really all I have today. I did want to spend a lot of time. The other markets, they look very similar. Well, let me do one. Let me look at one more because the euro appears to be entering. It appears to be coming close to the end of its trend. Well, here we'll look at oil too. Oil seems to be coming toward the end of its trend. The euro seems to be coming toward the end of its trend. So there's a lot of things that are at turn. It looked like they're at potential turns right here, and I just want you to be aware of it. The euro, you see we had this really hard pullback in the euro, and it looks like that wave 3 is about complete. Let's see, we can look at it on this, and it's a little bit easier to see. We'll go to daily. So you can kind of see the, potentially this is a 1, 2, and then this is all, 1, 2, 3, 4, 5, which would complete wave 3. And obviously the euro's not done going down. You'll still get a rally and then another sell-off, probably into a DP off of this area. To really know the best place, you need to go to a next higher time frame and put a DP off the swing for the next higher time frame. Excuse me. So you can see the euro's potential to go lower is still pretty significant. I mean, this area down here is quite a bit lower than even we are right now. So if you're trying to short the euro, maybe we'll get a bounce here, maybe a bounce up into this 1.19 area, and then you can look to go short and ride it all the way down here to this 1.14 area, make some money. Gold and silver, I think, are they're on the verge of being bullish, but they're kind of finishing up something here. I mean, it's just very hard for me to tell what's going on with gold and silver. Clearly, this is some sort of ABC, and I think we're going to rally up into this area at some point. I mean, we're right at trendline support, which is a great place to, if you're a trader, to look for support. So you can kind of see we're right at trendline support. Maybe sometimes the way you draw these, sometimes you don't include the low when you draw these. Works out a little bit better. So you can see we're right at trendline support. So if gold bounced tomorrow and started to rally and rallied all the way up into this area, I wouldn't be surprised. But there's just not a clear pattern on gold and silver right now. I would say oil is a little bit more clear. The US dollar, Canadian dollar, looks like maybe it's got one more little pullback in it, maybe into here, and then we should see a rally. Maybe this will coincide with a rally in the euro to have this pullback maybe down into this area around 1.24, and then take off. And I think this is a great market to look get into if you're going to go long any kind of forex stuff. All right, that is about it this week, everybody. Thanks for coming in, and until next week, we'll guys keep your stops on. Make good decisions. Don't have buyers or sellers remorse. But I think you're going to see. I think we're at a critical juncture. We should see some fireworks here in the next week or two. Okay, everybody take care. Thanks for coming in. We'll talk to you later. Bye bye.